We're speaking with Peter Hug today, Global Trading Director for Kitco Metals, one day after President Trump's unconventional press conference. And before we head into this long weekend for the U.S. and most of Canada, Peter, good to speak with you again.
It's good to be here, Danielle.
So would you say a bullish scenario is building up for the gold market here, since this presidency does seem to be more of a wild card for the world markets than any other U.S. presidency in history? Peter, how do you see it?
Well, if you're just going to base the answer on whether the presidency of Donald Trump is unconventional relative to past presidencies, yeah, then you'd want to be bullish the metals. But the metals are conflicted right here. You have Yellen that is spouting a more hawkish stance. One of her key comments that I picked up on when she spoke earlier this week was that every Fed meeting is now live. The market has been basically premising any rate hike or rate hike decisions on Fed meetings where there is a news conference after. So now they've left the door open, which is something that I'm very familiar with from the 1980s, where basically every Fed meeting is live. So you could be surprised at any meeting, which includes March. I still believe that Yellen holds off because until Trump's administration gives a more clarity to the fiscal plan and how they plan on paying for it, I think that puts the Fed on hold. I don't see the Fed moving ahead of understanding what that fiscal plan is going to be. So I'm still in the camp that the March rate hike is off the table. Okay. Then given some of the other macro events, the elections in France and in Germany and in Holland coming up within the next 2 months, it's possible that gold is going to have a bid underneath it. The upside, though, I think is going to require a news bite or some shock to the market, which could just be an equity sell-off, but it's going to require something.
Because I don't know if you're sensing it as well, Peter, but I do feel there's a lot of bullish sentiment right now surrounding gold. We're seeing a lot of banks also bullish the metal. Is this a warning sign?
Well, there's, again, the market is just uncertain. If you look at the CPI numbers, they were the highest in 4 years coming out of the States the other day. So you have inflation starting to pick up momentum. And if the Fed is behind the curve, I mean, you could make a very strong argument that, gold is in the very preliminary stages of a surge. But it's where the capital is being deployed. And as long as the equity markets in the U.S. continue to hold and go higher, there's going to be capital allocation into the U.S. market, which means dollar buying, which is going to be a headwind for gold. So the market is very conflicted. It's not going to be a straight shot one way or the other. It's going to be a stepped approach, which is basically what we've seen since December of last year. We've been picking resistance and support lines, and whenever those lines have been through, we've suggested new lines. Right now on gold, I need a 1337 close to hold again today. Ideally, a 1237. Ideally, a 1242 level on a close basis, which I then think brings in 1255 next week. Silver is very close to a breakout. If we can get silver over 1825, I think there's a possibility of seeing silver in the low 19s within the next 2 weeks.
Yes, silver looking good indeed. Pete, thanks so much for your thoughts, and we'll see you when we're back next week. Thanks so much.
Yeah, thank you. Bye-bye.
And thanks for watching this edition of Kitco's Gold Report. We'll see you next week.